Okay, good evening everyone. We should be live and ready to go. Richard and Drink Milk in here as always. Dixie Enormous, familiar faces and names. Hope you're all well and hope everyone's had a good weekend. Let me know about audio, video, if everything looks alright, and then we've got plenty to talk about. Looks and sounds good, etc, etc. Okay, cool, fantastic. First thing, before even the regular introductions, there's a new video on the channel. Not a live stream video, just a pre-recorded video titled Is There Resistance 14k or just something like that. Just click on Technical Roundup and go check it out. 15 minutes is just some high time frame context. Maybe it's useful, maybe it isn't. Hopefully it is useful, otherwise I suppose I've wasted your time. Also, if you could just go and leave a like on that video, comment, whatever, let's get those algorithms drumming in our favor, and it'll also be evidence for me that you enjoy the non-live stream content as well as the live stream content, and hopefully make it slightly more regular than it has been on the channel. And as always, any feedback you have about either the live streams or these videos or whatever else, just let me know. So let's jump straight into it. First things first, thank you to Bybit for sponsoring Technical Roundup. They make these live streams as well as our newsletter possible, so thank you very much to them. Their links are in the description below, and I think most recently, the most recent development has been the listing of new trading pairs. So if you're interested in what those are and news regarding all of that, you know where to find it, and also just be sure to say hello if you see them walking on the other side of the road. As for us, the market's at a key turning inflection point, all that fun stuff. So leave a like on this video. Thank you again for the subscriber threshold milestone thing of 11k. And let's get straight into it. So, Bitcoin, just looking at the monthly chart in its current form right now, I suppose even linear as opposed to log looks even better. It's hard not to be optimistic. Especially if you're someone like me who gives a lot of weight to candle closes rather than wicks, right? Because the suggestion with that framework on the monthly time frame is that we had resistance, it was broken and retested, and now the next level, there's like a lot of empty space with these wicks, and then the next level is all the way at 14k, which the market seems intent on reaching. Okay, it's a very clear shift in environment and market structure from a range-bound environment that we were in previously, right? Something of this nature. Not, it doesn't really matter too much. Clearly moving sideways in one form or another, and now for the first time we've had acceptance beyond a range boundary, right? So you can see in this instance at the range lows, there was a close below it which then got engulfed. So no acceptance there as a failed breakdown in terms of purely technicals back within the range. In this case, we had the breakout, but no failed breakdown or descent back into the range, and we're finding continuation at the moment. So monthly time frame looks really good. I'm glad that we finally got a move from this 10.7 area. Even my last Monday live stream, the title was "The Clock is Ticking," because things, the technicals or the chart, if I can relay such concepts, was really running out of time to be bullish or to simply move from this level. Again, you had a monthly close above, a full month of trading above it, a full month of retesting, right? In this retest period, we went as high as like 12.3k and as low as 9.8k. It's like, come on, man, like, we've been bullish since this candle, technically. When are we going to get the move? Too much foreplay can be a bad thing, and there we go, I've just demonetized the video, and the algorithms are going to slaughter us. Nonetheless, seems to have resolved bullishly for now, so I think the monthly time frame, this is the useful perspective to have in terms of levels. That's not to suggest there aren't other structures that matter, we will get into them momentarily, but if we're talking the high time frame stuff, that's where we're at. Okay? So, jumping down a little bit on the weekly time frame, let's just go log real quick. So in a very similar vein, if we look at wicks, right, Sorry, let's go to candle bodies first. So where was resistance, or where was the range that we were in? Well, you'll recall that we had this mid 10k area in one form or another. 10.3, 10.7 was were the 2 monthly levels, and then 10.5 doesn't really matter too much, right? Mid, even literally, if you even take 10.3 and 10.7 as the 2 monthly levels, you get your 10.5 as the mid-range or the mean of those numbers, whatever, right? And then on the weekly, now we're not just making up these numbers. Clear inflection point of previous resistance that was broken, and we had the first real weekly shift in market structure to the upside during this leg higher. Okay, it's all the significance in the world. Pullback got a bit sketchy, admittedly. Okay, I think in hindsight, everyone's going to look at this and say this is like the easiest long ever. I think we all know that it wasn't if you were there trading it. For some, it certainly was, and funding was very useful in that instance. And I know a lot of good traders who closed shorts at 10k simply because funding became so absurd and derivatives were getting really bearish at high time frame support. But even in the newsletter and technical roundup, we followed these developments, that we had the close below and then the subsequent reclaim of the mid 10k levels. That's kind of when the bull alarms started going off, and we wrote about funding in technical roundup as well. I'm not trying to shill you some premium product. The newsletter's free. The next one comes out tomorrow. Link is in the description. TechnicalRoundup.com. Go sign up. But long story short, the range we were in on the weekly time frame was comprised of, however you want to define it, this weekly mid 10k area as support, and then resistance from another big weekly level on the highest close here at 11.5. Okay, and you can see it comes back to previous support resistance as well. So these levels weren't to be mocked, right? We're dealing with some pretty serious structures. And the chop, which everyone felt, for me, was still characterized or comprised of these two levels. You can see we poked above it and got our failed breakout, and then we poked below it and then mooned back into the range. So there was like a lot going on between these two levels, 10.3, 10.7, or just 10.5 support and 11.5 resistance. That's been resolved on the weekly time frame pretty unambiguously. The direction in which it's been resolved is up or bullish. We've got a weekly breakout, pretty unambiguous. So in terms of levels to contend with on the weekly time frame that are above market, there are a couple, and one of them wasn't on the last live stream, but I think is relevant now. In terms of candle bodies, again, if I'm going to be consistent in my methodology and use this lowest close here, you can see that it actually comes out to 14k. And that's unsurprising because this is the same swing high we have on the monthly, etc., etc. It's literally the same level. So for me, the clearest resistance structure or magnet for price, if you will, on this time frame that's above market is still 14k. Doesn't matter if it's on the monthly or the weekly time frame. It's a kind of all roads lead to Rome scenario. But in terms of contextualizing where we are right now, it's not very often that there's like $1,000 until the next level, and then $1,000 until the next level. There's always something we can use in the interim for shorter term trading or shorter term bias. And for me, if we take this wick, this weekly last low before the breakdown, and extend it, we get a pretty decent level landing just under 13k, right? And you can see we had the weekly close above it, and it's currently being tested as support. And if that seems terribly reaching, if we go to the daily time frame, you can kind of see we're at a level right now, which is the one from this morning's video, which is this highest close on the daily time frame in this previous range / consolidation, or pretty much the top of this lower high rally. Let me just delineate that here, and that's where the daily time frame is at right now. You can see that the breakout doesn't look amazing, right? It's not the most impulsive thing in the world, certainly compared to how other consolidations have broken out. But at the moment, that's sort of how I contextualize the market and where it is in terms of support. And now we can start to add in our own levels, or the levels that already are on the chart, now that we've covered the context. And that's sort of where the market is for me, right? So let me just get rid of this very quickly. We've gone over the naked form of the chart, if you will, to provide context on a multi-time frame, whatever, level to level basis. But now that we know where all these levels come from, something I really like doing in these live streams, we can just overlay them and see what's up. Okay, so from a support resistance point of view, we're just positioning where the market is right now, and this goes to the title of monthly close pullbacks. In this instance, Bitcoin has pulled back to the nearest level of support it's got. at 13k or 12.9, which we know is this fantastic daily level. Okay. But these are the kinds of levels that I really like trading, because there's a lot of space above market and below market until, for me, we reach areas of significance. Okay, so the bullish case will obviously be predicated on 13k or 12.9 holding on at least a daily closing basis, right? For me, if we get a lower low close with where the market is right now, so something like this, if we close below the lowest close we've had at support so far, so let's say this daily closes like this, that would be bearish for me. I'd then just delineate this, basically this swing high candle, and use that as a resistance structure and look to get short into the higher time frame pullback towards 12k. And this is a level we can talk about in a moment as well, but the more detailed view of all these levels is in today's video on the channel, so be sure to check that out. So for me, testing support right now, so no reasons to be overtly bearish yet, certainly with how the monthly and the weekly look. Sign of weakness would be a daily close below the current lowest close in the range. I'd then simply just delineate the lowest close, highest close, just this green candle, if you want to keep it simple, as my support resistance structure or structure for bias, and then expect rallies into that to get sold, unless we get some crazy reclaim, blah, blah, blah. But generally, lower low close, bearish bias, and I'd look to sell red box and take it towards 12k for a kind of cool-off, more rounded retest. And again, if we're seeing how price has been engaging with these high time frame levels, a lot of it has been impulsive consolidation, impulsive, as opposed to just giving rounded retests to the levels. We've been kind of starved of that on the way up, so it's certainly not out of the question to get something a bit more substantial. Okay. In the absence of this bearish scenario, I'm just going to assume continuation, given how the high time frames look, and that would be from 13k towards 13.8k. And I'm not going to repeat the argument that I spent the whole video making, but I think there's a non-trivial chance that if we trade towards monthly resistance at 13.8k, that we overextend to some significant degree through it before settling closer to the level itself. So just like the monthly close at support, we had that 10.7 level on the monthly. We wicked as low as 9.8, but all the candle closes were more or less close to 10.7, despite violating it a fair bit to the downside, although it was a support structure. So we can apply the same logic to resistance and say 13.8 is resistance. We can expect some significant violation, maybe to 14, 14.5, whatever it may be, but then settle or close closer to the level itself. So that's kind of Bitcoin right now. In terms of pullback levels, and I think Mo is saying, where would your area for long? Where would your area for long would be on a pullback on higher time frame? For a higher time frame pullback, it'd have to be kind of this 12k area, which was the highest close. You remember this from the last live stream, I'm sure. Highest close of this leg before the nuke down should have been resistance. Instead, got completely engulfed with no retest, right? It just gets completely smashed. So I'm expecting that to be support if the market pulls back. As before, it doesn't need to be perfect, just like completely ping off the level and fly. Maybe there's an intraday trade to be had at the first bounce, but generally I'd need the top of this range or 12k to hold on a daily basis for any kind of bullish continuation or, deeper pullback into continuation. And 12k isn't just, this highest close before the nuke. We're back to our old range, basic technical analysis stuff, right? I've just extended this level to the left, and you can see we've spoken about this level a fair bit in previous live streams. And as before, whenever we have a range and the market breaks out of the top side and starts to pull back, we generally want to see the upper boundary of the range act as support, right? And if it fails to do so, well, at that point, if the market trades back within the range, well, that's not great, because the highest high made would then look like a failed breakout in one form or another. That's a really long way of answering your question, but for me, immediate support is at 13k, right, which is this daily level. Until it's broken on the daily closing basis, I'm just going to assume continuation higher. If I do get a lower low close, I'll look to sell rallies towards 11.9. Okay, which is basically the range high retest. The logical question, and again, I addressed this in the video, so please do check that out. It's quite short. excuse me, there are some arguments being made that this is the kind of retest level, that this is the support resistance flip, and it's a bit closer to market. So, you know, that's at 12.3. That's the kind of level to bid for any sort of pullback. I think that's reasonable. And again, level selection is never an art. But even if we just look on lower timeframes of where the bulk of the trading is done, right? Like where's the actual volume and where is structure? For me, this price action here, where we spend no time at all, on an intraday basis, this to me is far more anomalous than the actual range, which, you know, was resistance here, and then its upper boundary is expected to be support. For me, that's where real structure is, and the swing high is more anomalous, right? Which is why I've chosen to go for the 12K level rather than the highest bit of price action at like 12.4, 12.5, whatever else. And again, purely from just my own personal experience and how I approach markets, if I'm looking for a high time frame pullback, and I've got like a level that's a B plus, let's say here, and then one that's an A plus, but maybe it's slightly lower. If I get involved too much at B plus and stop out somewhere in the middle, more often than not, price will find its way to the level that I should have been trading in the first place and then give the easier trade, rather than me getting involved and baited by the level, which isn't as great. That's just a value judgment. I'm sure you can do some volume analysis, like bring up the VPVR and, you know, all that kind of stuff, and see that the 12K is much more significant than 12.5, but for me, this is it really. 11.9, 12K is the high time frame pullback support, and this swing high isn't really it for me. Okay, so I suppose the simple way of delineating that is sad face for this level, smiley face for this area. Okay. The only other structure that I've added, this daily level at 12.9, hopefully you know where it comes from now. This highest daily close, pretty significant, and it's nice to get some sort of bearing between high time frame levels. And I've also just added a bit of a trend line. I think it works on the daily as well, but very clean intraday, just joining these lows here. And these trend line breaks tend to work fairly well for Bitcoin, so I didn't see any harm in having it. Okay. Certainly, if I'm going to get on board some sort of, you know, faster moving momentum continuation entry, I wouldn't want to do it with this trend line intact. That would need to break for me to, you know, to act as extra confluence, or, you know, that's when we might see things accelerate. Final thing, did anyone catch this pattern that we've talked about like a million times on stream? I got one DM of a guy saying that he basically got short near the high of this resistance, overshoot, resistance back at the level. One bloke told me he sold it, which is hilarious, because all we do on this stream is just talk about that one pattern, right? For a myriad of reasons, you know, resistance, and I always say like, oh, well, it's resistance at the level itself, like a broken record. I didn't catch this personally on an intraday basis. Some trading within the range, but certainly not this, although in hindsight it's very obvious, and maybe I should have caught that. But yeah, it's nice to see that these patterns don't go away and still work. Drink Milk says yes. There you go. No surprises there. So yeah, long story short for Bitcoin, just a quick summary. Monthly still looks good. 14K is resistance. Weekly, very similar. 14K resistance. We've broken out of the 11.5K range. And we're now at weekly/daily support, essentially at 12.8, 12.9. The daily time frame is the one that marries these best. Okay, so we're currently at support. In the absence of a daily close below the level, or the lowest close made at the level, I'm going to assume continuation towards resistance. Just seems reasonable. If we do get a lower low close through here, right, so below, I can even say what this price is for me, at least on this data feed. Yeah, I mean, look, it's basically one-to-one with the level, right? So daily close below this level would probably be a kind of risk-off suggestion or signal. At that point, I'd just delineate this whole top or consolidation and look to sell rallies into that towards 11.9K as my first trouble area. Okay, fairly straightforward in this case. Like, the levels have been acting really unambiguously to some extent. This does look a bit tired, right? Like we've got swings above previous highs, which have failed and found sellers, but that doesn't mean I'm going to start selling into support until I've got good reason to think that market structure's shifted one way or another. Perhaps an interesting observation is that when we were trending between levels, these failed breakouts were getting completely engulfed, right? If we look at these periods of price action, for example, let's zoom in a little bit. There was no such thing as a failed breakout when we were trending higher, right? Or when the market was hot on momentum. Like we broke above here, for example, and you'd get these nuke attempts, but then they'd get completely engulfed and set in another leg higher, right? In a similar vein, you had all these attempted nukes. So you can even look on the 4-hour, which makes it kind of clear as well. All these scary looking candles, above the swing high, oh my god, look, it's an SFP, shooting star, etc., gets completely destroyed, right? Same bit of price action at resistance. You have this SFP type of candle, oh my god, look, gravestone, doji, shooting star, bearish, and then gets completely trashed. So on the way up, none of these failed breakout setups were gaining any momentum, okay? So this up here was the first real sign of sellers stepping in on the breakout of previous highs, as we essentially had on this pattern here, right? Breakout, make new highs, and then that got nuked. But at the same time, what has that achieved? Is it so different from those previous instances? Well, not at the moment, because support, high time frame support, is still intact. So I think we're getting hints, really small hints of shifts in conditions, and I suppose the aggression on the buyback isn't the same as we were having in through the 12K, high 11, 12K price levels. But I don't know, maybe there's something going on. Doesn't really matter. I'm just bloody speculating and just chatting shop there. For me, the clear triggers will be the daily time frame. That's about it. Okay. So for those of you who like squiggly lines, bearish case would be close below red, right? Something like this. I would then just use lowest close, highest close as resistance and look to sell rallies within that towards 11.9K. That's what would need to happen for me to get bearish, or at least look to position on pullbacks. Okay, the bullish case is basically no daily closes below support. So this level staying intact, and then I'll just assume higher towards and likely to some extent through high time frame resistance. Does that make sense? I might think, oh, big scary candles and failed breakouts, and again, some signs of weakness, but that's not going to make me sell into daily support. It just doesn't make any sense. Michael says none whatsoever. What doesn't make sense, Michael? I can try to clarify, perhaps. I mean, the summary version is that the monthly, the weekly all look great. The daily time frame is still at support. So the minimum I'd need to even consider shifting bias is for that daily support to fail, and then perhaps a higher time frame pullback will be in play. But until such a time, I've got no reason to think a shift in conditions is present. Hi George, how you doing, mate? You're long again? Yeah, I saw your 50R hedge. You should look for 60R next time, otherwise you just won't make it. You know, I'm sure CoinMarketMan can make something happen. Leave a like on the video if you enjoyed the explanation, wink wink. But yeah, that's Bitcoin. Depending on how this plays out. Yeah, nothing to... Oh, Michael's trolling. Okay, cool. Yeah, that's Bitcoin. So ETH is the one that really worries me. Okay? Because on the monthly... my focus has been on the ETH monthly. And that just still looks rough. Jose says... What's Jose said? I just saw sponsored by Bybit, but using Coinbase charts. Yep, they're great. We can use whatever charts we want. There's just more data for high time frames on these spot exchanges. So sick burn, bro. Why are altcoins non-responsive right now? I mean, why would they be, right? If the high caps and the majors are selling off, and there's some perceived risk off within the crypto market, right? Then you don't expect them to outperform in such a time, perhaps with some exceptions. There are kind of mean reversion plays to be had when the majors bounce. Like some altcoins will bounce harder. Like the altcoins which dump less when the big boys dump are the ones which will usually bounce harder when the big boys bounce as well. But I don't think they kind of decorrelate and start leading and doing any of that shit. So that would be my speculation with regard to altcoins being non-responsive. When you say daily close, it's literally when the daily candle closes, so midnight UTC. So the problem with ETH, and again, we'll talk about monthly close pullbacks and what it actually means, because we have a split picture in ETH that the monthly pullback is to resistance, but then the lower time frame pullbacks are to support. I know it sounds difficult to reconcile, but if we just look at the weekly, this level, right, you know my favorite level, 389 or 400, whatever, support resistance flip here, this is still a bearish retest with where the market is right now. Resistance, support, close above it, close below it. That's typically bearish. It's suggestive of a failed breakout, and there's more proof or evidence of that given we spiked above previous month's high and then closed below the level, and so it's acting as resistance once again. Okay, so the ETH, so we've got basically its Operation Rescue the weekly. Bulls have got like, what, 5 days or something to save this chart, which currently looks rough. And I think Donald tweeted to the same effect. I basically agree with his analysis that the levels that matter here are immediate resistance around 400, and then the nearest support is at this swing around 300. Okay, so until we get some sort of reclaim, yada yada, through 400, this seems to be the more probable route for price, in my opinion. We had the attempt to reclaim it, it closed bearishly, retesting as resistance, and then support is at 300. Okay, so no, there's no signs at the moment of that being shifted away or changed. The weekly time frame is like slightly more ambiguous. I would argue that the weekly is at support, and that's kind of what we have on the daily time frame, and that's a basic eyeball test here, right? We've gone into we're retesting an area of basically the breakout level, right? Here. So you have previous resistance. Also, I mean, look at this area generally. You've got like old lows all over the place. The last two swing highs, final swing high, break, retest. Okay, so ETH is at support. If you're an ETH bull and you're kind of on the do or die bounce train, like Bitcoin at support, ETH at support, etc., this is the area generally, and as close as possible to invalidation, so as close to the lower boundary as possible, generally, is where longs make the most sense. And it's a really straightforward technical setup. If it pushes down to this lower boundary, that's something I can play on an intraday basis, as in day trade. But because of how the monthly looks, that, you know, we're still retesting, or, you know, the monthly is still saying bearish retest, I'm not going to position for bullish swing trades on the daily and weekly. But I can play the lower time frame bounces. Okay? So hopefully that makes a bit more sense in terms of the monthly is bearish, but the lower time frames look bullish. It sounds weird on its face. We've got a bearish retest on the monthly at around 400, but then because we had this leg higher, which took us significantly through that monthly level, it created this nice level that we're back at right now. So in these cases, I basically distinguish my time frames. So for low time frame, yay, you know, price at support. If it revisits the low or comes into this consolidation, I think there's a bounce play to be had on lower time frames. But the high time frame, unfortunately, because there's no alignment whatsoever, and in this case, it's not even the fact that it's not aligned, it's contradicting the lower time frame, because high time frame is rough and low time frame is good. I'm not going to position for swing trades if my higher time frames aren't looking too good. Okay, so that's what I mean by ETH having a bit of a mixed bag. Yeah, and look, ETH. Someone asked about ETH weekly. So that shelf that I just drew on the daily time frame, like this consolidation, basically, right? This old shelf. That's basically the weekly level as well. So if you remember where that is, if I go on the weekly and get this pre-breakdown cluster and put a line on its lowest close here in red. And again, where that line comes from very quickly is we have this big weekly nuke engulfing candle, so we can just use it as we can use the lowest close and the highest close before this candle as a support resistance structure. And so we can see that it's gone back within the range and retesting it as support. So it's reasonable to expect a test of resistance if this holds. Okay, so that's where the red line comes from. And if you look at the daily, we have alignment. It fits perfectly on top of that box or shelf that we were drawing. Okay, so ETH, monthly, shit, weekly, daily at giga support. For me, that means I can't swing trade it on a high time frame, but I can trade it intraday for shorter term bounces. Does that make sense? We will look at Link. If we get 300 likes, 100 likes on the video, cough cough. Yeah, that's what I've got for ETH. I wish the timeframes were aligned, but they're not. The monthly looks crap. So the best I can do for bulls is to play shorter timeframe bounces. Okay. ETH BTC looks rough. Okay, that's something else which isn't terribly helpful. We were range bound for a while. Yeah, I mean, I'm surprised the likes jumped by like 10 or 15. Maybe we should do more ASMR close mic content. Anyway, for a while, ETH BTC just became generally uninteresting because we had resistance at 36s hold and then support at 31s was holding as well. And we added this grey box in one of the live streams as well as an area of resistance. And now we're starting to see real bearishness in ETH BTC. Okay, so I suppose if you wanted to make a reaching argument or just an argument for being bearish, if you're not buying into all the technical bullish retests, I think you could quite reasonably make the case that on the way up, ETH was leading, right? And it was dragging Bitcoin up by force. So maybe we've got the mirror of that, or the inverse of that, whereby Ethereum is also leading the charge to die, and it's going to kind of drag Bitcoin down with it. I'm not too persuaded by that argument, given I think there's been a rotation into Bitcoin and it's a bit more significant at the moment. But I mean, looking at ETH BTC, I mean, in the newsletter, the conclusion we came to is that looking at the USD pairs is just going to be more straightforward and glean more useful information. But in terms of ETH BTC, it's broken down from the best support level within the range. So I generally expect continuation towards, well, lower towards our other levels. Unless we get some sort of fantastic reclaim event, blah, blah, blah. We're just getting lower low closes and previous support turning to resistance. So ETH BTC looks rough. Now, what that means overall is that even if the market, like assuming ETH BTC is bearish, if the market climbs higher, that would suggest that Bitcoin longs are favorable to Ethereum longs, right? And then if the market's going to take a dump, because this suggests that a bearish ETH BTC just means ETH is weaker relative to Bitcoin. If the direction for the market is going to be bearish, it would suggest that being short Ethereum would be superior to being short Bitcoin if we're going to move to the downside. Okay, that's, I suppose, the most baseline version of events or way to interpret that. Okay. Yeah, not too much going on there. Link USD. As before, I think there's just a really straightforward structure here, which I'm going to actually add to the chart for once, because I don't know where it keeps going. I'm going to call this cluster top. Okay, and then the lowest close as the cluster bottom. So you're pretty bearish on Bitcoin and Ethereum. I don't feel that's an accurate summary. I've got Bitcoin at support on the daily time frame. I think Bitcoin looks good until I get a close below this level or the lowest close within this range. I'll assume continuation, right? So that's not a bearish view. For ETH, with where the market is right now, I'd say I'd be long favored simply because of lower time frame structure, but I can't take any high conviction or certainly no swing longs because of what the monthly time frame looks like. So favoring bounces, but no swings for ETH would be the kind of summary version, I think. Let me know if that doesn't make sense. Going back to Link, I really like charts that kind of give you just one level, and it's really good. And all trade ideas end up being generated or contingent on that one level. For me, it's this consolidation that took place before the all-time high rush. You'll recall that Link really likes these technical patterns where you get impulse, consolidation, impulse, and the consolidation ends up being a nice support resistance structure. We have the same here. You have the impulsive move, couple days of consolidation, and then the final leg which took it to its highest price, and that formed the kind of support resistance structure or range which is currently in play. On the first breakdown, acted as resistance, and on this retest it missed slightly on this exchange. I mean, if you kind of used more recent structure, it worked, whatever, it doesn't really matter too much. Market structure is creeping higher with higher highs and higher lows, but I think I don't want to long a market structure break into resistance, right? That still makes for an unfavorable set of circumstances, in my view. So the higher probability or faster moving bullish continuation would, for me, look something like this, right? Any strength through 13.8, 14, get back within this old support range. I think there's a good chance we trade towards the top of the range, right? And at that point, when you're so close to price discovery, there's a good chance you just rocket through. So for me, the faster moving trades will be above resistance. Okay, so again, something like that or something like that, whatever. We all know the price action tools we have available to us in terms of getting positioned, right? And as I've said before on numerous live streams, I wish I could show you the exact squiggly line, candle close, whatever, but it's generally not a useful tool. So the best I can do is offer my levels and the direction in which I want to trade the break with price targets or first trouble areas that I'm looking for if the trade idea or if the level rolls over as in a way that I find actionable. So that's the clearest thing in terms of where we are right now. As I said, market structure is creeping higher, right? You've got higher highs into higher lows, so that looks really good. I can see a scenario where we essentially get a higher low on a pullback either here or into the base, which led to the higher high in the first place. So Link still looks good. There might be a dip to catch on if we get continuation in market structure here. And this is a really good example, actually, of... Anyone remember that lesson we had in market structure? Which is basically when you get a higher high, right? So you get a shift in market structure, whereby you've got a high here and then a higher high here. The two areas to look for continuation in the most straightforward sense are either where market structure was broken or some sort of higher low structure on the leg up, right? So it's either at the previous high or some sort of retracement level that goes a bit deeper but then makes a higher low relative to the last swing. So this is a really good example of what that would look like, right? If I delete this quickly, market structure is moving higher. So, and it was broken again when this high was exceeded. So the aggressive continuation for a market structure break is where market structure was broken, which for me is here. And then the higher low scenario would be closer to the base of the move with this as the invalidation. It's not perfect because there's usually a bit more space between those two structures, but this maybe is a useful diagram as well. If you go to my Twitter, I think it's a bit of a hidden gem. I've got like a 2-minute video on market structure, which I made as a Twitter clip. And go check that out. I kind of explained this as well as in previous live streams, but I just thought it was relevant and maybe useful to talk about. Again, looks good, but I think it'll look best and the easier trade will come through resistance and back into this old range. Okay, but nothing bearish about this at the moment. Hi, Zed. How you doing, mate? Ferry says, really like the clean chart explanation. Quick question, do you ever use other indicators? I'll sometimes look at momentum oscillators, but not extremely often. Maybe just the cope. If I'm like, oh my god, this thing has gone up so much, I'll just like throw on the stock RSI and be like, yeah, this shit's gonna nuke. But I don't use like indicators in any kind of systematic way per se. Link BTC just doesn't look as good as Link USD, which is kind of rough. Link BTC is kind of stuck. And the two levels where it's stuck can most clearly be seen on the weekly time frame. So again, similar structure as before. Impulse, consolidate, impulse. The consolidation is like a nice support resistance structure. We have an impulse here, sideways, impulse. So we have like a range. This was the highest close and lowest close, which preceded, I another leg higher, so it's significant. Again, always get flack for drawing like a big box. Of course, it's support. It's not that the whole box is support, it's the upper and lower boundaries that really matter. The highest close and the lowest close, at least in my system. So what Link is doing is essentially consolidating at the highest close and using that as support, but it's stuck at the area where it bounced first, right? Which is its resistance. So it came into this level, bounced, this is where it topped out, and that level is still where the market's trapped. So you have a bit of a range with high time frame support at the range high, and then resistance at the top of the first bounce. Okay, so if this just kind of peters out and rolls lower, we basically get a boundary to boundary play from range high to range low. Oops, that wasn't supposed to happen. To range low, and I think likely revisit this wick here. Okay, so that's Link. Not been terribly interesting for a while now, and not as nice as the USD pair. I think a similar argument can be made in terms of where are the higher probability or faster moving trades for like a momentum continuation long. You can see there's a difference in market structure here as well. The USD pair was making higher highs and, higher lows as well as higher highs, right? Whereas the BTC pair is making higher lows but also lower highs. So this thing is consolidating. Okay, and it's consolidating at high time frame support, so we're really in low edge, more kind of coin tossy territory. So given that, going back to the idea of where are the higher probability setups, we can use very similar structures as in the USD pair. We have this previous support. It was slightly less clean here, right? You had this reclaim event where it closed below and then closed back above, but it didn't really do anything. So for me, the structure is still valid. So just like we've got like $18, this type of setup on the USD pair, I think it'll work in a similar way for the BTC pair as well. But overall, until it does something like this, or at the very least breaks market structure, it's just not as interesting and doesn't look as appealing. Okay, the strength is in the USD pair and market structure is good evidence of that. YFI is kind of petered out of relevance to some extent, I suppose, and I mean volatility has dropped off, etc., etc. Instead of like when price reaches levels that are really good for a high time frame bounce and good candidates to do something interesting, and instead you just start moving sideways for days at those levels, I just tend to lose interest unless price reaches like the extreme of that structure where risk reward is kind of optimized, right? So for me, for kind of do or die, play for a bounce, whatever, I want to see price trade to the lowest close of this consolidation, which preceded this breakout, which lands at around 12K or 12.2K. Okay. And on the momentum continuation side, I'd need it to reclaim the old range, which I've got delineated using the lowest close here, landing at around 22K. Okay, so either give me something extreme at the range low where I can say, okay, this is capitulated, do or die, now or never, because there's no real support on the way down if this level... Oops, that wasn't what I wanted to draw. Because there's no real support on the way down if this level fails, so give me like a do or die bounce, clear invalidation thing at 12.1, or give me some sort of link-style reclaim event within the old range, and that would also give me a clear target on the other side of that from range low to... fuck's sake, from range low to range high, right? Something like that. A to B. So unless you want to give me this extreme or this reclaim, I'm not terribly interested in price moving sideways, kind of in the middle of nowhere within this cluster either. Just not really my cup of tea. And again, no real shifts in market structure yet. Maybe there's some sort of trendline break thing to be played here, but yeah, nothing too crazy. I'd much rather look at those two levels posited earlier. And the kind of do or die nature of the 12.2K support is kind of evident if you zoom out. Like if this lowest close in the complete bottom of this range doesn't act as support, there's no real structure until, for me, this entire move gets retraced. Okay, so do or die levels, if you identify them correctly, that's where your risk reward is most cracked out. Which means even if you're a little bit right, and even if you catch like a small bounce, there's plenty there that's worth trading, right? So just as a quick reminder, number one that matters for me, level number 2 that matters for me, either give me something extreme to play at the down here, right? Like near capitulation. Oh my god, this thing's about to roll over to zero. That's kind of where I like to buy a lot of the time. You know, give me my death swiftly, or some sort of momentum continuation, Andre running for president setup, where we can play the range from the range low reclaim into the range high. But that's it. Not this price action here. There's just nothing appealing about it. XO is here as well, even though I said hi to SZ earlier. I don't mind saying hi to my friend, the same person, twice. Gold, not really much. ES is an interesting one. It actually looks a lot like ETH on the daily, which is a weird one. So you remember ETH had this shelf on the daily time frame that it's retesting, like a area of previous highs within this consolidation. So ETH at support, you can see this kind of reasonably tight resistance, breaks above it for not a terribly long period of time, and then comes straight back into it. Okay, that's ETH structure. If you can like screenshot this in your head for a moment, like this doesn't look too different, right? Something like this. So that's just, again, no real strong views in the market that I've never traded a contract in before, but pretty interesting technical analog there. In terms of my levels, I do have us at support, and that's coming from the weekly time frame, right? So I've basically got 4 levels on the weekly time frame, which I don't trade, but kind of use to provide context. I think they're pretty good, or at least they're reasonable on their face. So it's essentially the range, the lowest close, and the highest close preceding, well, basically that formed at the old all-time high before the Corona nuke. Okay, and they've been acting decently well as support resistance as well. And the only other level I've got, which isn't in that range, is the highest close that we made, the highest closing week at the all-time high, which then acted as resistance as well, which is cool, I guess. So where we are right now, if we contextualize the current daily close, we are retesting that Ethereum-esque shelf, but it's not just that, it's also weekly support at 3380s or 3300. Okay, you can even be slightly generous and just kind of draw out the whole consolidation before this breakout leg and have that as a support structure. So technically it looks a lot like ETH USD, whereby you have a breakout from an old range, breaks out, pulls back, right, and basically you are here now. You want this to hold, because if you fall back within the range, you get pressure from all the guys who ate a plate from buying the range breakout, and then you get pressure towards the bottom of the range, right? Failed breakout at the top generally moves towards the bottom. Failed breakout at the bottom generally moves towards the top. So that this area really should be holding, unless we have to then contend with mid-range and range low once again. There are elections coming up basically imminently, so I don't know whether it makes sense to either use TA or have particularly strong views. I'd much rather pay attention to Bitcoin and ETH, which are kind of more my markets. But if anyone wants any context on this, that's sort of the best I can do, I suppose. Yeah, those are the majors. Any questions so far? Anyone want to discuss anything with regard to Bitcoin, ETH, anything we've talked about? Happy to hand it over to your side. But this looks fine for now. Looks fine for now. Not amazing, but not terrible either. I don't want to short support, right? No matter how much I get scared by intraday price action, I don't want to use lower time frame price action to get bearish into higher time frame support. It's just not something I can. Not how I trade. I didn't really cover dollar index or just dollar, whatever. You can go to check out Donald's streams. I think he's got some lines for that. As far as I'm comfortable going is the S&P. Any altcoins looking promising? I don't know. I don't think so. I mean, if you count Ethereum as an altcoin, arguably for short-term bounces, it's in a decent spot at high time frame support. Oh, sorry, like medium to high time frame support. But that's kind of the best I can do in terms of alts. Sushi Lover says, so like, what needs to happen for altcoins to move? It depends whether you're talking alt USD pairs or alt BTC pairs. I suppose where we are with the market cycle generally, like if you remember when DeFi was at its hypest, it almost didn't matter what anything else was doing. These things would move like crazy against stablecoins, just all the fresh listing, all the frenzy, Uniswap, etc. Like everything would move. Now, when DeFi is like sectorally struggling, and Bitcoin has led this rally, and that's where the attention is in terms of the ecosystem, I'm not terribly sure what conditions would need to be present with how things look right now for altcoins to win back some of the spotlight. I think ETH, at the very least, would need to start outperforming Bitcoin, and then newer altcoins would have a chance to ride on its tails. But if we're in a Bitcoin-led leg or cycle, then I think altcoins are generally going to struggle with some exceptions. Someone asked about BNB. BNB looks alright on higher time frames. I mean, monthly close is coming up, so that's going to be a lot of my focus for these, right? Generally, as long as that area holds, I'd expect it to fill in a lot of this leg down of selling. If we look at this consolidation as the old range, like lowest close, highest close, we've got a breakout, and now this is kind of the retest portion. So that looks generally okay. Yeah. And again, if we look at levels which shifted market structure, you had this leg up, which made a lower low, right? So just like Bitcoin, we like to pay attention to the legs which lead to market structure or precede market structure shifts. So this leg up shifted market structure and made a lower low. So should have been resistance at the high. Instead, smashes through it and now acting as support. And we also have reasons to believe we've got monthly support there. So BNB looks, against Bitcoin at the very least, looks fine. Okay. The clearest example of that, again, certainly in hindsight in terms of level selection, I was using 10.3 and 10.7 generally. And as you'll know from the streams, there was no real high time frame reason to turn bearish Bitcoin after the monthly closed above 10.7. But if we follow a similar type of logic, like, okay, we've got the wicks, we've got these candle bodies, these lows, like where is the level that actually matters within this range? If we apply the same logic of the high, which led to a lower low, and also if we look at kind of recency, obviously the most extreme and outstanding example is this high here. Because this is the high which led to the complete mega nuke, and then should have been resistance, and then we were above it, retesting it from the top, right? There. So I suppose that's a small tool or heuristic for determining like where the actual level is. If I've got like an area where there are like a bunch of highs, a bunch of candle closes, and like compressed levels, and I need to make a choice because I often trade off of... I'll sometimes have a box, but for the most part, I like to have levels because it just makes trading a lot easier for me. I will always defer to the open or close, which shifted market structure one way or another. So if all else is equal, I'll look at recency, and if any of those legs or structures shifted market structure to either way. In either direction, not to either way. Can't even speak English. But yeah, long story short, Bitcoin good. If Bitcoin below 12.9, Bitcoin less good towards 12k. ETH, monthly shit. So any longs or bounces are for me going to be lower time frame. Lower time frames, decent / okay. Probably some sort of bounce from 387 or 380s generally. ETH BTC, not good, but probably maybe some mean reversion coming back. But generally, unless it reclaims the range, expecting it to move back towards 24s. Link USD, market structure creeping higher, looks fine overall, but wanted to get above 12/13 for easier continuation longs. Otherwise, support at 11.5, and then more likely closer to 10. Link BTC, worse than Link USD, and I'd look for it to do the same kind of flip of the previous range to get bullish this instrument. YFI, either want some sort of extreme capitulation, extension, whatever, through 12,300s, or a reclaim of 22,100s. Anything else is chop, crappy, whatever, that I'm not interested in. Dollar USD, lol, sorry. Gold, didn't look at it. Oh, actually, gold's a good one. So the monthly close on gold, if we use the highest high made, the way I delineated this level was using the body and the high in this case. I think a close below 1920s will take us towards 1820s, right? We had the all-time high breakout, and then it closed below that level and is now using as a resistance. So I'd expect it to trade back towards the candle bodies, or the all-time high, the top of this range, as the nearest level of support. As for ES, go watch Trader Z stuff, it's his market. But generally, I've got it at support at 3380s. If it closes below that, or any weakness through 3350s at the extreme, that would look rough towards 3300s and 3220s. There's your summary. If you enjoy the summaries, like the video as well, and do all that fun subscribe, algorithm-inducing stuff. Here comes Ape Speak, thanks to the concise breakdown. Yeah, oh, it's Ston, how you doing, mate? I think if it's the same guy from Twitter, nice to see you. But yeah, there's your summary. I keep getting shilled Dot. I think Cold-Blooded Schiller was looking at Dot yesterday, and he asked me about the market structure shift here, and I agreed with him. Are we talking the USD pair or the BTC pair? He made this really funny point, which I totally agree with and is so true with regard to just personal streaming experience. If you ever ask for charts, like coins to chart, and people just spam you with cash tags or whatever, 99% of them will always be the ones that are like the biggest gainers for the day, which is, you know, predictable, but also just interesting. Oh, against Bitcoin. .BTC. So, how about this? Wait. Okay. So using that similar logic, we like to pay attention to levels around which market structure shifted. So we have this small swing higher, right, at support, and it led to a lower low, right? Low, lower low. Now we're currently poking above it. So if you get a daily close above this consolidation which shifted market structure, we can simply draw that as a box as well. I'd expect that to act as support. Right, so then something like this, ideally the lower boundary, because risk reward is better. So 34s or 35s would expect a bounce from A to B. A, and then the first trouble area is like your basic support resistance flip to B. Okay, that would make sense to me, but I've never traded this coin before, and I really don't know what altcoin Bitcoin pairs are going to do. But purely technically, with this candle, it needs to hold the pre-breakdown range at 34s or 35s to be technically valid. If it is, I think there's a potential play to daily FTA at 38. That's kind of the best TA I can give you in that case. Yeah. Crypto Dog says, I agree. Fantastic. Bitcoin doing bits now. Ren USDT. Yeah, I don't like this chart. It's like it's put in a weekly lower high at the moment, and immediately my eye just gets drawn to this highest close and lowest close here. Wait, who asked for Ren? Oh, Ren USDT, yeah. So 0.15, 0.19. My eye is kind of drawn to this level. If I had to trade this, it'd be within this old range. Up here, since we've got a high, it broke down, retraced, we've just got a lower high at the moment. For me, like the structure where I'd consider punting this is within these boundaries here. Up here, there isn't just a lot going on for me. I'm sure, listen, I am, it would be so dishonorable and in bad faith for me to look at Dogecoin simply because it's Donald's home. It'd be like me walking into his abode and taking a dump on the carpet and putting my feet up on the table with my dirty boots on and all that kind of stuff. So I'm not going to look at Dogecoin. I'll let him do it on Wednesday. Okay? How about what does the chat think? Up or down for Bitcoin? Like, if we come back to this stream on, like, Friday or Monday, do you think the price of Bitcoin will be higher than it is now or lower than it is now? Yes. Okay, a bit of a mixed bag. 100k by Thursday. Yes. Down, sideways. Okay, look, we don't have, it's nice that we don't have a, you know, what's it called? Echo chamber in here. Someone earlier asked about like a momentum continuation entry. I'd much rather trade closer to the level rather than momentum continuation. But if I had to, as you know, the whole lightning doesn't strike twice setup. Like when you get a failed breakout, a double failed breakout is significantly less likely. So in this instance, using this highest close, right? You've got resistance, overshoots, resistance, right? So if we creep up back into this level and don't reject and start like closing above it or any sort of like, you know, the new fancy term as everyone's acceptance at the level, right? Or just simply no resistance at 13.2k, I think there's a good chance it just runs towards the highs. So again, the point I'm making, and I'm sure it's familiar to those of you who watch the live stream, when you get this type of resistance, fake out, resistance setup, it's very rare that it does this portion of it again. That it pushes up, closes above, then it's like, oh, it's going to be a fake out. It's just like this time, then it nukes again, having closed above it. Or having been trading back above the level. That's quite rare. These kinds of fake outs, for the most part, especially if the market's like behaving well, they stay, right? So once you reestablish resistance at the level itself, it's the level itself which is going to hold if the market's bearish. If you find it being accepted or trading back above or closing back above the original level, it's far less likely to be a double fake out, so this times 2, and far more likely to just be a continuation higher. Okay, so I suppose the last ditch entry, obviously I'd prefer trading closer to the level itself if support's going to hold in this area, but kind of gun to my head, where is the momentum continuation setup? For me, it would have to be above the resistance which has been reclaimed. Okay, so for me, this really isn't much resistance up here. It's the level that matters more than the high we made above it. If anyone gives a shit about my general opinion, the technicals say one thing, right? Monthly looks good, weekly looks good, that there is an argument to be made for a pullback towards like 12k, etc., but not as long as daily support at 12.9 is intact, etc., etc. But generally, like going into some version of COVID winter, I know there's stimulus, etc., etc., but I suppose I'm finding it, technicals aside, difficult to be super bullish a risk asset into what's likely to be some sort of shitty, unfavorable winter for most economies, right? And I don't give that any weight per se, because I'm not some bank FA super smart person. But gut feeling, if we give that any sort of significance, it just doesn't feel great. And I'm finding it hard to come to terms with Bitcoin flying to 14, 15, 16k while the world is taking shit during the winter. So those are my 2 cents for what they're worth on those matters. winter of discontent. Yeah. That's all I've got for now. And be sure to go check out the video on the channel, 15 minutes long, the one about the 14k level. There's some useful higher time frame trading stuff there. But yeah, if I had to just give you 3 levels to pay attention to, for bias, daily support at 12.9, that's where my attention's going to be. If we close below it, I'm basically going to use the highest close and the lowest close as my resistance structure and look to sell that towards 12. But if that doesn't happen, I'm going to assume continuation higher. Okay, if we start getting high time frame pullbacks, there might be some shorter term bounces to be played at 12.2, 12.3, etc. But for me, the real structure starts to come in close to 12. So there's like some space to be had in between. Okay, for ETH, I have the market at support right now, so I think in the very short term, lower time frame trading, bounces are more favorable, right? Longs are favored, etc., etc., simply because of how the market is shaping up to be right now. But if the monthly close doesn't fix itself and close back above 400, right, or 389, whatever it is, I'm not taking any high conviction or heavy longs because the higher time frames look significantly worse than the lower time frames at the moment. Okay? So that's kind of what I'm watching for the monthly close. Monthly close above 389 or 400, bull goggles on. Shorter time frame, bounce plays potentially on the table, but I need some sort of alignment to get high conviction plays. Bitcoin summary, ETH summary, ETH BTC we talked about, just kind of crap trending down. Link needs to do more. Link BTC looks worse than Link USD, also needs to do more. YFI, give me the extreme at 12.2 or above 22. For now, it's just chart moving sideways. S&P, similar to Ethereum, I've got a high time frame support, 3380s. If that fails on a high time frame basis, we'll probably see more selling close to the election into 3300s and 3220s. Like the video if you learnt even just one thing or picked up anything useful. Thank you all so much for over 11k subs. Genuinely, despite my monotonous voice, we are very grateful for your support and wouldn't be here without you. Speaking of people with whom we couldn't be here, thank you to Bybit for sponsoring Technical Roundup. They make all of this possible, so make sure to check out their links in the description below, as well as tomorrow's newsletter. Technical Roundup comes out every Tuesday at 8 p.m. UTC. It's also free. Donald and I bash our heads together and something comes out of it. It's also free, so if you just want the levels and the interactive charts and all that fun stuff without the commentary, squiggly lines, or off-topic commentary, that may be the thing for you, and we'd love to have you sign up to that non-spammy, non-intrusive mailing list. Credible Crypto here as well, Ston, all my learned friends and colleagues from Crypto Twitter. Very grateful for you guys coming and checking out the stream. So that's all I've got. Hope you have a fantastic start to the week, and I'll see you on the other side in text form on Tuesday and for Casual Friday on Friday. Thank you very much, take care, and I'll see you another time. Bye-bye.